Economic Impact Payment, EIP, Recovery Rebate Credit, RRC, and Tax Preparation for 2020 done in the year of 2021. Economic Impact Payments Round 1 and Round 2 went out in 2020. Now we're left with the practical question of, is there an impact of those Economic Impact Payments on our tax return for 2020 that we will then be filing in 2021? Also, what's the relationship between the Economic Impact Payments and the Recovery Rebate Credit? So we'll be thinking about that and take a look at the actual software and take a look at the actual calculations and where they might be showing up on the actual 1040 and the related schedules here. First, quick recap of what the Economic Impact Payments are and the related Recovery Rebate Credit. The Economic Impact Payments went out Round 1 and Round 2 in 2020. Round 1 was $1,200 for individuals, and then $2,400 for married couples, because of course that's double as two individuals. And then we had the $500 for qualifying children, those being one required of under 17 typically. Then we had the second round, which I believe was $600 for the individuals. That would be $1,200, basically twice as much for married couples, and then $600 for the qualifying child, one requirement to be qualifying child being that they're under the 17 age limit, typically talking about dependents there. Now, the thing with the Economic Impact Payments that you want to kind of consider, the way you want to think of them as, is really they're going to be a prepayment of the Recovery Rebate Credit. So the credits you could see on the actual 1040, they're typically on the second page. They're kind of like better than deductions, so the dollar for dollar cash back. So they'd be on the second page here, and if you were to qualify for the credit, you'd have it down here on line 30, the Recovery Rebate Credit. So if they didn't issue any of the Economic Impact Payments and simply said, hey, look, we're going to give people this credit, we're just going to give everybody a credit on their tax returns, then when you filed the tax return, you would have it here on line 30, and you would just basically get the credit at the point in time you file the tax return. But, of course, the IRS wanted to get the money out soon. That was the point. So what they did is they gave a prepayment. They said, we're going to give the credit on the 2020 tax return, and then we're going to give a prepayment based on the information we already have, meaning they're taking that information basically from prior tax returns, 2019 or 2018. If they didn't have any tax returns, they took it from whatever information they had, like Social Security payments even and whatnot, to issue out the Economic Impact Payments. They then tried to gather as much information as they could. So if they had any problems, because people didn't file 2019 or 2018, they don't need to, they tried to pick up the information with other tools so that they can send out the prepayment in the form of an Economic Impact Payment. But the remedy, if the Economic Impact Payment was wrong, has always basically been that they're just going to fix it when you file the 2020 tax return. And that means that many people that don't need to file, they're not required to file, if they didn't get the proper Economic Impact Payment, are going to need to file the 2020 tax return just to pick up the Recovery Rebate Credit, which they didn't get in the form of a prepayment because they didn't get the Economic Impact Payment. So in other words, if you got the incorrect Economic Impact Payment, the remedy for that is to file the tax return at this point in time for 2020 and pick up the Recovery Rebate Credit, because the Economic Impact Payment you can think of as simply a prepayment of the credit on the 2020 tax return called the Recovery Rebate Credit. Now, the first thing to note is that if you got your Economic Impact Payments correct, if the IRS got it right, and they got it right for most people, then you don't have a Recovery Rebate Credit. You really don't have to do anything. Your tax return should be basically the same at that point in time because they got it right? They got the prepayment right, and it ties out to what the credit would have been, and basically you don't need to put anything typically on the tax return in that case. We're talking about the situation where it's wrong. When might it have been wrong? When might the IRS have gotten it wrong with round 1 or round 2 of the Economic Impact Payments? So, for example, the places where they might have gotten it wrong is if there was an income limitation, an income phase out, then you might have gotten a lesser amount of the Economic Impact Payment because they based it on the income for prior years, 2019 or 2018 or something like that. And then possibly in 2020, your income was lower, it's quite likely for many people, and maybe you would qualify for more, right? So you might have that kind of reconciliation. The other common issue is a situation, for example, that if you had a qualifying child, or if you were a qualifying dependent, not a child, say like a student in the prior year, and you were being claimed on your parents' tax return, And now in the current year, maybe you're not a student anymore, right? Well, in the prior year, the IRS had the information that you were a dependent on another tax return. And in the current year, maybe you're not a dependent. And if you're not a dependent, then you would be qualifying for 2020, which is actually where the actual credit should be calculated on, even though the IRS did it based on the prior year because they were using the only information they could. So those are two common kind of areas. The other common area is that the IRS possibly just didn't have the information. So if you don't file your tax returns and they couldn't get the information in any other way, then they may not have sent out the checks at all because they didn't know where to put them. And if that's the case, then that would be another reason why you'd have to file the tax return. The tax return should be fairly basic to file in those cases. Also, if they didn't know about any dependents, say they sent out the economic impact payments because of something other than tax returns, like they sent them out because they knew about Social Security payments, then they wouldn't know of any dependents because the tax return wasn't filed. So they wouldn't have picked up the added $500 in the first round or $600 in the second round because they didn't know that there was a qualifying child involved, and so they couldn't pick that up. How do you reconcile that at this point? You file the tax return for the recovery rebate credit. Okay, so first off, when you file the tax return, that means there's going to be a lot of people that are filing the tax return and they don't know, and maybe they don't need to file normally, so this is kind of an added burden just to file the tax return. So it's kind of a new thing to do that. Just realize that there is free software to basically file the tax return typically. If you go to the IRS website at IRS.gov, IRS.gov, you can go into just right from the home page, or you can type up top free file software. You can go into the file your taxes for free section, and that actually gives you this little interview process, which will then recommend third-party software such as TurboTax and other type of software, which actually provide a free option if your income is below a certain threshold. And that's really helpful because the software gives you kind of an interview process to help you to enter the data into the system. So if you know anyone that doesn't normally file, or they're not required to file, or if you're not required to file, then, and you need to this year, you're thinking I might want to, then you want to basically go here and possibly see if you can do it for free using the software, which will help you to do it. Because if you do it just by hand, pen and paper, first of all, the IRS is kind of frowning upon that because they're trying to do everything electronically. And second of all, it's way harder than if you have software that helps you to kind of go through the process. Also note, if you're not required to file or someone else isn't required to file, you may still want to file because you might be getting some money back, say from any withholdings you had, and you might be eligible for an economic impact or impact payment, which is the recovery rebate credit, and you might have other refundable credits such as the earned income tax credit and the child tax credit. And the software, again, makes it so that people can basically figure those things out, those are pretty complicated credits actually, but the software can figure it out if you go through the interview process and really be helpful for that. Also note, so what do you need for the economic impact payment? You should have got a notice like a 1444 A or a 1444 that will tell you the amount of the economic impact payments. So you're going to need to know what the amounts were for the economic impact payments to know if they were not what they should have been, and then you can enter that into the software to see if you can get the recovery rebate credit. So obviously, if your economic impact payments were wrong for some reason, you're going to need to know what they are so that you can then file for the recovery rebate credit. Also note that if your information is on the IRS website, you can go to your account. So you can go to the IRS.gov website and go to view your account here. And then if you enter your information into the IRS website here, you should be able to then see the economic impact payments that were provided for you. So that's another option if you're not sure what the economic impact payments were for round 1 or round 2. You can go to the IRS website and see if you can log into your personal information and see if you can get access to what the economic impact payments were. Once you have that, then you can go to the software. This is going to be Lacert software. This is probably more of a professional software that doesn't have like the interview kind of setup, but it's a similar thing. We know that on line 30, we got the recovery rebate credit. So I'm just going to kind of jump to the data input here. I'm going to say, well, what if I jump back over to the data input? Here's where you input the recovery rebate credit information. And for this software, you basically need to enter the information for round 1 and round 2. Now, let's say I didn't get anything. Let's say I didn't get, because they just didn't know about me, right? And in my software, I have to put a -1 for round 1 and round 2. I'm going to say I didn't have anything. And then I'm going to say that my income was below the threshold to file. I'm going to say that I had income of $10,000 from my employer. So then if I go back, so here's our scenario. We have the Form 1040. We're going to say we are a single filer at this point. We've got the Eric Smith here living in Beverly Hills 90210. It's a false social security number. This is a fake return, of course. We go down then below. We've got the 10,000 in the wages, and then we have the 12,400. That's the standard deduction. Now, because our wages are below the standard deduction, we may not be required to file. Remember that if you're not required to file, doesn't mean you don't necessarily want to file. One reason you may still want to file is if you get the recovery rebate credit, and other reasons might be an earned income tax credit, child tax credit, and so on and so forth, as well as any withholdings that you might have had on that 10,000 that would then be coming back as well. So if I then go to page 2, then we're going to say, okay, no taxes are really owed. We still have no taxes owed because we normally wouldn't be required to file, but we want to make sure that we get access to some other possible benefits, including possibly this earned income tax credit. That's not where our focus is now, but just note that that's another area that you might have access to. We're focusing in on the recovery rebate credit. It's calculated at the 1,800. Why? Because we had the first round that was the 1,200, second round that was 600. For the individual filer, that's going to be the full amount of the 1,800, which we told the system that we didn't get any. We didn't get the first or second round, and therefore we got the credit here of the 1,800. Note that the tax liability up top is 0. There's no taxes up top, and yet we're still getting the benefit, what we call, quote, a refund, end quote, when it's not really a refund. This is more like a benefit at this point because we're not getting money back. We're getting the benefit of the 1,800 plus this recovery rebate credit, which we're not focusing in on at this point in time, but just realize that that's another refundable kind of item too. So we get the, quote, refund, end quote, of the 2,243 in this case. Now, one reason this might happen is maybe, let's say you were claimed as a dependent in 2019, and then you weren't a dependent in 2020. That's why possibly you didn't get the economic impact payment, but now you've got the 1,800 here. In other words, if I go back to the data input and say I was filing the tax return, but I was claimed by someone else as a dependent, I'd say could be claimed as a dependent, claimed as a dependent by someone else, say was a student or something like that, claimed as a dependent by the parent for tax purposes, then the recovery rebate shouldn't be calculated here, right? It should go away. And so that's why you might not have gotten it if you were claimed as a dependent in the prior year, if you were, say, a student or something like that, and then you get it in the following year. So that could be a scenario. So let's go back on over and let's add that back in. So I'm going to say, okay, we're not claimed as a dependent, and that means that you would think that this would then populate back in place here. Okay, so now what if we had a qualifying child that was going to be added in? So we're going to say, all right, well, and also just note, if I received the correct amount of the economic impact payment for this software, then you wouldn't need to do anything for the data input. We would basically say, okay, let's go to the input. I'm just going to delete this, not put a 0 or anything, and that's the default position for this software because the assumption is that you got the correct amount of the economic impact payment. Therefore, nothing populates here if you don't enter anything, because that would be the default assumption, meaning the IRS got it right. They sent you the economic impact payment and it was correct. Therefore, nothing really needs to be done. So if I go back on over, I'm gonna put it back to where it was, -1, to calculate the full thing as if we'd got no economic impact payment. That'll put it basically back on the books here. Let's say that we had a qualifying child, and so we're gonna say, all right, well, what if there was a child involved here? Let's add a good old dependent. So let's go and add, say we've got a dependent that wasn't picked up. So Tom is our dependent's name. And we're going to say the date of birth is, I'm just going to say 0101 and 20. And we'll put a fake social security. And we're going to say it's the son here. So then let's see what that does. If I go back on over, now our focus is in on the economic impact payments here. But notice, again, even when we're under the threshold, not required to file, you might get some benefits here. So if you were to look up, do I need to file because I made $10,000? No, but let's check out the scenario and see if it would be beneficial still. You still want to look into it, and you might have the free software to do it. So once again, individual tax return or single tax return, living in Beverly Hills 90210. Now we have this dependent, Tom Smith, on the books. That's a fake name, fake social security number that qualifies for the child tax credit because they're under, for one of the requirements, under 17. That also means that they're a qualified child for the earned income credit or the recovery rebate credit. So that means we should have got another $500 for the first round and $600 for the second round. And we're saying here that we didn't get it. And so let's see what the impact is. $10,000 on the income still. That means we have no tax. We have no taxable income. So there's no tax going to be calculated. IRS is going to tell us you don't need to file. We don't need, it doesn't matter. And then you got the tax is zero. But you may then qualify for the earned income tax credit. Again, I'm not focusing in on the earned income tax credit, but if you look at it, it's complicated. It's a bit complicated because it's based on your earned income. And then we're focused in on here, which is going to be the recovery rebate credit. But also just note that you have now the additional child tax credit, which is also a refundable credit. This is the refundable portion of the child tax credit, which would be normally up here. But now it's going to be down here because our tax liability is zero. But once again, we still get a benefit even though it's at zero. And then we have the recovery rebate credit, which is now at the $2,900 because we're saying we didn't get it. And what should we have gotten right now? We should have got $1,200 for the first round, plus another $500 for the qualifying child, plus the second round, which was $600 for the individual and $600 for the qualifying child. There's the $2,900. Now, in this case, what will typically happen in this case is you got paid most likely for yours, and maybe they missed the qualifying child. Meaning, if I go back to my data input, probably in this situation, they're going to say, okay, they didn't know about the qualifying child. So if you look at the economic impact payments that were sent out, maybe you just got the $1,200, and then the other side was $600, and you didn't get the added $500 up top or the added $600 for round two, and therefore, if we go back on over, we're going to say now we're at the $1,600 because they didn't pick up the qualifying child, which was $600 plus the $500 or the $1,100. So that's the difference that are going to be picked up here in the recovery rebate credit. So just note that if your income's below the threshold, these are the areas you're looking at to see that if it's worthwhile to file. The other thing, just remember, just to see if it's worthwhile to file the tax return is if you had the withholdings. So you might say, okay, I had $10,000, I got like $100 of withholdings. And then if I go back to the forms, that's going to be something that's going to come back as well because your tax liability is zero. If you're thinking you're only going to get this $100, you're going to say, well, it might not be worth me to file because it's kind of tedious to do. I might have to pay someone to do it. But one, you don't have to pay someone to do it because you might qualify for the free file software. And two, that's not the only thing that you may have access to because you got obviously a significant item down here, possibly the earned income tax credit, possibly a child tax credit for the refundable portion, the additional child tax credit, and possibly the recovery rebate credit. Now, these credits do then phase out. So let's go back to these credits again and say, let's bring it back to the max. Let's bring it back to the max. I'm going to say we didn't get any for round one and round two. Let's say we didn't get any. And then that maxes it back out at the $2,900. And then if I bring my income threshold above, let's say $75,000, I believe, for individuals, then it starts to phase out, right? If I made 100,000, then obviously I would be required to file the tax return. I'd be used to filing my tax return in that case, or well aware that I should be filing it. And then you can see that the recovery rebate credit is down to 450 because it's basically phasing out here. So it's down to 450. And so it's quite possible that maybe your income was something lower, like 100,000 last year or something, and they reduced it, and maybe this year it's higher. So let's pretend like in 2019 your income was 100,000, but this year it's like 10,000, right? Because it was a bad year in 2020. Well, that would mean if I went back over and said, okay, well now they based my economic impact payment when it was 100,000, but now I only made 10,000, right? We're going to go back down to the 10,000, and then the recovered rebate credit over here, the amount that they paid me based on last year, I'm just going to I'm going to divide that by 2, which isn't exact, but 225 and 225 is what we got because there was a phase out and they didn't give me the full amount because I made good money in 2019 and then I was crushed in 2020. So then if we go back on over and then we have it back up. So then there's going to be our difference on the recovery rebate credit. So that's one of the other reasons why you might, the recovery rebate credit may be applicable because you didn't get the full economic impact payment because they based it on 2019, which you did a lot better, and there was a phase out possibly than in 2020. Let's just consider a situation where we have married filing joint now. So if I go back on over and say, all right, let's bring this back down to the full payment here, full payment, and then I'm going to go back to the client information, and we're going to say now they're not single because Eric's getting married. Eric's getting married to Jane. So now we have Eric and Jane. So now if we go back over, we got the 1040. We got married filing joint now for Eric and Jane living in Beverly Hills 90210 with the Tom Smith as the dependent still, but only the $10,000 in dollars. And then we got the $24,800 as the standard deduction at this point. So if we go then to the second page, we said that they didn't get anything. So they got the withholding of the same withholding that is going to come back. And we're saying they didn't get any of the economic impact payment. So how much should they get now? Well, basically, if they're married, they get twice as much. So round 1 was 1,200 times 2. So it should be 2,400 because there's 2 people because they're married now. And then the second round was 600 times 2 for the 2 of them, which was the 1,200. And then round 1 for the qualifying child was another 500. And then round 2 was 600. So that's the 4,700. So you can see kind of the starting point. So if they got paid everything, you would think it would be the 4,700. If they didn't get anything, then you would think they would get the recovery rebate credit of the 4,700. So you can see here as I'm jumping back and forth, the software really helps for these calculations. Both the recovery rebate, all these credits. The recovery rebate credit is a little complicated if you need to file for it. But it's not too bad. It's really easy if you got software. You can do this and you can kind of figure it out. The earned income credit, complicated. Probably the most complicated credit, for the normal credits. But if you have software, you could totally, figure it out. It can help you out to do that. And once again, the recovery, the additional child tax credit, also complicated because the refundable portion is confusing. But software can help you out. There's free file software on the IRS website, or you can at least start there and get to the free file software.